I will then introduce our next speaker, and our next speaker is Professor Heng Wang, co-director of the Herbert Smith Freehills Siebel Centre in UNSW Law and Justice. And Heng is researches into the Belt and Road Initiative, China and economic deglobalisation, and central bank digital currency. He has been an executive council member of all three Chinese societies of international economic law, and is heavily involved in one global and two other Asian societies. He has spoken at WTO headquarters and leading institutions including Harvard, Oxford, NYU and LSE on issues relating to his research areas. And he has taught in Australia, Canada, China, Japan, Singapore and the US as a visiting professor, and has frequently been interviewed by media. And you'll see a lot of his comments around CBDC issues and other issues in the press. So Heng's topic today, as we say on the slide, is China's approach to central bank digital currency, and I welcome Heng. Thanks, Heng.
Yeah. Thank you, Deborah. It's been great to share the discussion about China's approach to central bank digital currency. Next slide, please. What would like to, at the very beginning, is to introduce what is the CBDC generally. I think that's the previous speaker has done a fantastic job introducing the CBDC. In the China's context, the CBDC is about, it's called e-CN yuan or digital yuan. Essentially, it's being a digital fiat currency. The CBDC, I would say, that's been quite different from traditional currency in the sense that, it involves data. Because if you think about cash, you don't really have track of the use of the cash as much as you do as CBDC. And that involves digital identity and, of course, technology and regulation, as well as those issues regarding the data flow across the border if they're used internationally. The two questions I would like to discuss: one, what is China's approach to CBDC? Two, what are the influencing factors, or how do we understand China's approach to CBDC? Next slide, please. And also, I have a recent paper on related issue about broadly CBDC network and the future of global financial crime system. So you may have access to that at the link. Then let's look at China's pathway or approach to CBDC. I would say that China's approach to CBDC are both common and also different from other countries. In terms of similarities, we're able to see that they're all top-down approach. So it's been the central bank-led one. And also we'll see that the central bank's role will be strengthened in areas like monetary policy. And they're able to have better sense of what's happening in terms of currency flow. And they also have some common arguments in terms of underlying of the why we'll have those kind of the incentive, like financial inclusion, as mentioned earlier. And there are some similarities in terms of encouraging innovation in payment. So these are the similarities. Next slide, please. And then let's look at what are the differences. I would see that one of the major differences, if we compare what we have seen, Chris has mentioned that in Australia, it's more about wholesale CBDC. While the major difference between Chinese one and foreign one of the major differences, Chinese one is a retail and CBDC, public available to individuals, users. And it's kind of a account-based one. So which means that actually it's a kind of the cash-like liability of the central bank. And so we see that actually the users, they may link the CBDC with their bank accounts. They're largely connected with the commercial bank accounts. But of course, they also have some design which enables that the digital wallet of Chinese RMB, e-RMB, you don't need to open a bank account for you to have a digital wallet. So I would say that actually it's a kind of combination of account-based CBDC, which means you need a commercial bank account, but also a tokenized CBDC in the sense that you don't necessarily need a bank account. So it's kind of the hybrid one, they rely on both accounts, but also try to ensure that they can also operate without opening a bank account. And another aspect is that it focuses on the electronic payment. You can see from the name, digital currency, electronic payment, and they currently focus on the retail sale transactions. And there are two-tier or hybrid structure. So the first tier or first layer is the central bank will issuing and the CBDC, and the second layer, the actors like commercial banks, they were redistributing central bank digital currency to individuals. They also involves not only commercial banks, but also like payment service suppliers, as well as the telecommunication operators, like the major telecom companies in China. And another aspect you can understand China's approach is that they have exchange and circulation. Exchange will be conducted by commercial banks, regarding exchange or redeem the bank deposit for the China CBDC. That's like what happening in for the paper currency. Commercial bank will take care of that. And in terms of circulation, it is go beyond the commercial banks. So you could have the payment service suppliers, telecommunication operators involved in that regard. And another aspect we see that's for China CBDC, which are now undergoing the pilots in 4 cities in China, is being the controllable anonymity. So which means that at the back end, the central bank will be able to see what's happening, where the money is being spent by who. At the front end, it may not be seen by the third party, but the central bank will have the able to see what's happening. And more broadly, I think that's China's approach may be different in terms of China as a leader in fintech, and also China's being a state-led economy. So the government or the regulator play a very strong role in that regard. Next slide, please. And then the next question I would like to discuss is about what are the influencing factors? How do we understand the China's approach? I would say that maybe it's kind of a way of the selective reshaping or selective shaping of the currency or the monetary order. I have a paper where if you scan the QR code, you can download that. So in the past, as mentioned, proposed by Professor Porter, that China in the past, in the accession to the WTO, is kind of downloading, external norms. In terms of CBDC, it looks like China's being, the first major economy to trial the CBDC and like to issue that. And so it's kind of where China incrementally uploading their practices to an extra-regional level. I think they are similar to previous practice of China in accessing the WTO, which we can look as a benchmark in understanding China's approach. In the past, China is a selective adaptation, downloading, but now China is being a selective reshaping. There are some similar factors influencing China's practice, but their meaning will be different from what happened in the past. The first, factor is the perception and conception. And second one is complementarity. Third one is legitimacy. Let's look at the first one. When China developed the CBDC, it's very important that they will perceive what has happened in the practice of the fintech, including what happened in the Libra. Those are the global stablecoin. Their discussion, and also in terms of the regulation in the digital currency, that will affect China's design of CBDC because they're not start from scratch. But more importantly, it involves also the conception. So how China develop new plans, ideas, and initiatives regarding the retail CBDC, because that go beyond payment instruments and involve broader issues like data, like digital identity, like the issue about how do you make the offline payment, how do you design the technological designs and standards, as well as the issue like the privacy. And next slide, please. If we look at another factor, is about complementarity. The second aspect of that is how the new practice and institution China is promoting will fit with China's being actually the preferences. China's preference, I think, at least includes an enhanced role in international governance. China's being a trading power, but not a monetary power. So that CBDC may help China to increase the role, particularly in terms of first mover advantage in the digital currency era, in setting the agenda and also to influence the standards, technological standards in this area. And also, they are also involved about trade as well as investment finance that helps China to promote, for example, RMB internationalization, and also using RMB in terms of the trade, because that's also useful for the getting the data related to international economic transactions and reduce reliance on the US dollar in those kind of international transactions. And thirdly, I think the preference will include the response to dynamics like has been imposed by Libra, because China has basically prohibited private digital currency. A third aspect is about legitimacy. So China's being designed the CBDC, indicating that they are good for China's CBDC in terms of the actually domestic legitimacy, financial stability, efficiency, and so on and so forth. But I will see that actually, you take one example is financial inclusion, and the issue is that actually they also have challenges. For example, for CBDC, it's good for serve unbanked population, but CBDC still requires you to have the a cell phone, and maybe a relatively advanced one. There are some reports about that. So it turns to be that how do you serve the people who are lack of capacity to get the cell phones, or elderly people. So there are also challenges in that regard. For international legitimacy, that also involves the issue if the CBDC is used internationally, it'd be crucial to be secure legality and acceptance as a global means of exchange. So that depends on how other countries and users accept this CBDC. So that's being involves a lot of efforts, to enhance transparency, ensure that the confidence in the data, and also privacy protection, consumer protection, and so on and so forth. And we will see that it won't be an easy job, because there are potential tension, for example, between security as well as efficiency, because you want, high efficiency, or if you need more high security, that may slow down your process. That may work against efficiency. Again, for privacy as well as the compliance, they may also have the tension. And final factor is about institutional capacity. So that involves the capacity of central banks, involves the regulators of the intermediaries, like commercial banks, telecommunication operators, and also involves the capacity of intermediaries. It actually involves both hardware, infrastructure, but also about the software, like the regulatory capacity. And there are many issues that are relatively new, like consumer protection. How do you deal with, the possible risk of loss, the mistaken transfer, the fraud risk? How do you deal with digital identity? If the CBDC will be used internationally, how do you manage the data flow, and the sharing? And also, our next slide, please. So the final slide is being, I also have some recent work relating to the broader context on CBDC, which you can scan according to the QR code. I will see that to summarize, China's CBDC approach is a moving target. So for example, at the early stage, they seem to be more cautious about smart contracts, but more recently, they seem to be more open to the smart contracts available to the CBDC, because they are kind of learning and doing practice. And it looks like that they are trying to pursue a flexibility in this process. And secondly, the practice is more about domestic retail transactions. It remains to be seen whether they'll be used in international context. So, for example, there are reports that China is discussing with Singapore about possible use of CBDC in Singapore, and also we'll see whether it will be used along the BRI. There are some reports that China also promoting the technology standards along the Belt and Road Initiative regarding CBDC standards, according to China Daily's report. And I think there are more broader contexts that deserve attention, like COVID outbreak, they speed up the CBDC development, but also I think that's also the potential competition among different currencies, because I think no central bank won't be lag behind in the digital era, and also the competition also with private digital currency like Libra, and also that depends on the technology advancement, because if technology develops very fast, maybe the first sort of move advantage may be affected. So I think that's what I would like to talk at this stage. I would like to finish here, and thank you.
Well, thank you very much, Heng, for that comprehensive discussion of a whole range of important issues which are emerging from the development of CBDC in China and will impact on various trade issues and other issues worldwide. And one of the interesting questions which we have for the panel is one where the participant says, I'm very worried about money laundering and black markets. Is there any promise that this digital resources will change the way digital crime has affected the world and becomes more aggressive daily? Which of the panel members would like to answer that question? What will digital currency, central bank digital currency or private digital currency, will that affect the difficulties which are currently felt within economies from money laundering?
I think it's been a great question, and also it's, as mentioned by Chris, it's been a hard to balance between anonymity as well as compliance requirements for KYC and also anti-finance for terrorism. So they probably need to have a careful line to be drawn, to balance these two considerations, and they are like to vary according to their jurisdictions. I think maybe a kind of the guideline or regional consensus, on the minimum requirements, regarding privacy protection, and also regarding the compliance requirements may be useful in that regard, because otherwise it will affect the confidence in the CBDC. People may be concerned of using the CBDC, because for the cash, you don't really have those CBDC does not have the same anonymity with the cash. If it's not properly addressed, they will affect the use of CBDC, particularly the retail one. Thank you.
Thank you very much. Okay, we've got a few interesting questions down here. I guess one of the questions we've got there is when we talk about financial inclusion in the context of CBDC, why is it that current electronic money formats can't bridge the financial inclusion requirement, but CBDC can? So someone might like to give a short answer on that. Would you like to do that, Heng? Would Wei like to do that? Perhaps Heng is the most appropriate person.
I think right. Financial inclusion, they may also be reached by private, digital currency or present in electronic money. So I think that's I think it's a good way that's also to use current electronic money to to promote financial inclusion requirements. For CBDC, I would see that maybe they also have other functions. Financial inclusion is only part of that. And also, as I mentioned earlier, financial inclusion may also face difficulty in CBDC. If the CBDC requires relatively advanced smartphone, they may not necessarily totally address the financial inclusion issue because people may not be able to afford that. So I would see that maybe we're better to have more, digital currencies which are able to, have maybe a little bit more even redundancy to address financial inclusion issue. But another side, the CBDC also involve other consideration like monitoring of money going, and also potential competition in the digital fiat currency. So these are the broader picture that may driven central banks to move forward because they don't want to be lost in the competition in terms of the payment. Thank you.
How will CBDC best engage with the existing commercial and regulatory issues?
I think it's been the CBDC need to address the new issues arising from that. So, for example, I think you have new issue about data, which does not exist for for many of the cash use, but also the digital identity. So the big is actually to rely on or adapt the current commercial as well as regulatory arrangement as much as you can. But also we will see that it won't be easy because they also need a lot of the attention to the changes, for example, to commercial model. So, for example, the commercial banks may face defunding because actually people may move from their deposits to the CBDC. So that's one possibility where the commercial banks may face higher cost for funding. And also, secondly, I think they also need to pay attention to the different standard setting because they like to have a different divergent regulatory requirements by different countries regarding CBDC. So that's another issue. Third, I think that they need to also pay attention to the security, because cybersecurity is crucial, which doesn't happen for the physical currency. And also that relates to the issue more generally about the compliance cost. How do you manage the compliance cost because you are subject to different requirements? I would say that actually we're likely to face a currency competition. So businesses or regulators all would like to see a more dynamics of international monetary system. And they may also have a parallel system may arise down the track. Thank you.